Hey, good evening, everybody. Still here for the Daily Market Pulse. It's January 29th, fast approaching the end of our first month in 2014. So stocks faded further. They sold off in higher volume, consequently more distribution days, which we knew that count was pretty high. So consequently, only 5 calendar days after being under pressure, we have now turned this market into a correction. And so while there could still be some bounces, there's likely to be some more pain on the downside. It's not fully confirmed for sure, certainly because there's still some levels that can be broken. But just the fact that there's been selling in higher volume just kind of tells you, and it's not in capitulatory fashion, meaning that it's not looking like a reversal in this kind of high volume either. So it could happen as early as tomorrow. We'll see how every day goes. So with that, let's look at the indexes. Okay, Dow Jones, you can see, is right into that pivot area right now. So, I mean, technically speaking, we're living below the 50. We're living below, of course, the pivot area from above at 15,100, 15,200 or so. I'm sorry, 16,100 and so on. But into another pivot area right here that may or may not hold, but certainly as a little bit of selling aggressively. It's very oversold, but it doesn't mean it can't go any lower. It can still go lower, but I'm still looking for some kind of a bounce at some point. Before likely more pain ensues, but we'll see if that's the order they take it, because it's gone 1, 2, 3, 4 consecutive closing prices below the lower Bollinger Band. That's not customary. You don't usually see that. So we'll see how they react again tomorrow. Of course, the FOMC meeting was today. They decided to taper another 10 billion off the top. It went from 85 to 75 last month. This month from 75 to 65 as well. So let's take a look at the S&P. Same thing applies here. You can see the former high, then it became former resistance, became support, then became support once again. Still in of course, a rising channel. The lows are not going any lower as of yet. So overall, net, while you may not necessarily have higher lows of late, you're at least going sideways. So for now, let's see if they can hold this 1775 level with a little bit of a balance before they take this thing even lower. Again, the next levels could be into the 1740 area, as deep as even 1700, where the 200-day moving average is. So we'll see if that occurs. If it does bounce, I'm not looking for much more than 1800 to maybe a little bit higher, but that's about all. Let's go elsewhere here. So NASDAQ finally closed below that polarity area, right, 40.85. So that gold line, you see the high, bearish engulfing. It held. It bounced off a couple days ago. It held yesterday again, and it finally closed through it. So will this be the start of the final flush? Don't know. You can see there's still room lower to the round number 4,000. A lot of room to another window down below near 3,900, and then lots of room still to 3750, where the 200-day moving average currently resides. So we'll see how they all do this as well. TSX for our good old Canadian friends above the border. You see the polarity area again at 13,500. It's holding. The 50-day moving average still holding. It was a bounce yesterday. It did not really make a new low today. It did not sell off very aggressively, so it held. Gold was decent today. Currency in general was kind of decent today as well. So Canadian stocks that are very commodity rich held reasonably well here. Not fully oversold here either, so everything still looks like it's short term to the downside, but there's still overall intermediate to long term, as you can see. While you're holding above the 50, the strength of the trend is still pretty strong. Buyers are still present, at least for the time being. So with that, the US to Canadian dollar currency pair is still rising, still holding the 8 moving average, rising quite aggressively, getting further and further away from the 50, as you can see. If you look back just at the beginning of the month and beginning of the new year, prices were just hovering right at the 20, but also right above the 50. Not the case now. Way far apart. After breaking out above 107. Went up, sideways, a little stair step, up again, a little stair step again a few days ago, and then up, higher again, matching the highs of the shooting star from just a week ago. But it still looks decent with no sell signals as of yet, with possible room higher still. And then with this announcement today, we saw Treasuries really raise higher. So I talked about the dark cloud cover already, and I didn't really think that this was true selling. I didn't really was going to take that dark cloud cover very seriously. Yes, it hit the 200-day moving average. A little bit of an intermediate target, if you will, but that was not a real resistance area. There was really nothing to be I thought anyway, too fearful of. The golden cross with the 20 crossing over a rising 50 was adding more strength as well with already a rising 8 moving average. So sure enough, a dark cloud cover, essentially doji formation yesterday, and then a huge bounce today. It went lower on the open, it went lower on as a new low. That was just part of the consolidation, and then boom, took off, made a new high, higher close. Slight pause here right now after hours, as you can see, with the room still to 134, which we said our next target would be. So it's still looking for that at this point on the Treasuries. And the Japanese yen behaved very similarly. Talked about it as well. Closed 3 consecutive days above the 50 prior to today. Came off the 8 moving average as well with a lower open today. It gapped quite a bit lower and then reversed higher, finishing with a new high and a new higher close naturally. Again, like Treasury sideways action here after hours, but everything still seems pretty strong as it's holding above the old support, which now is the old support, which became resistance temporarily in the first week of January, now support once again. I should probably just extend this line right here, this whole area. See, that's the new support, including the 50 moving average and the 8 moving average as well. Target now becomes higher into 99, and possibly that 100 number as well, a little bit above. Gold was a little bit higher. You can see here a little bit of a bounce. Still needs to clear 1275 to 1280 and close above that. So a little bit of a bump up higher again, and even after hours, it has gapped up on the open and still remains higher and more positive than earlier today. Has not surpassed today's high, however. But as I said, the 20 is now crossing over the 50. We still need to get over 1275, 1280 for this to show more strength to go back up toward the 13, 1320, 1340 area. And then there's crude. You can see the rise above the 20, the 50, the 8 moving average. It came back to test the cluster of moving averages as long as it remained above. That was a sign of strength. Now, of course, the 20 did cross down and below the 50 and is still in a declining mode, but price actions here is trying to go higher, maybe try to pull that higher. The 8's rising, the 50 is actually starting to rise. The 20 is the only one going in the wrong direction. So that's why there's a little bit of confusion. You can see where they've been keep tapping $97.50 to $98 here in terms of kind of a resistance area, while the support remains directly below across the 50-day moving average in that 95.50 to 95.75 region. So kind of sideways, choppy back and forth on a daily basis. But you see that green candle going on after hours, looking possibly to come back and meet into the 200, but also the 101 area would be the next target, in my opinion, if it can go higher from here. And then you've got amazing natural gas, just continues to just stun. So big cup-like formation, came up, handle, came off the 5200 bounce, went through 460, 480, held there for a little while, then just zoomed into 540. I heard, I think it was today or last night, a shortage of propane, or maybe natural gas, but it might have been propane in Wisconsin. So that's not good when things are that cold in that area and they've got nothing to warm up their houses. So obviously a shortage then means higher prices, but you know, it doesn't make sense because there's so much natural gas stored. It's ridiculous, but of course they don't release it until it's truly needed. Now of course it's needed, so of course then they can raise the prices when the demand is much higher, even though the supply is enormous as it is. But anyway, it's bizarre. So let me do something here real quick. I'm going to go low to high with a retracement back to this area, which is 50%, and you can see the 100% of that move, that measured move up from that low here, took you right into 513 to 550, almost 520 essentially. And it went right on through that into the 1272 extension at this point. So if it's going to go any higher, next target would be into 6, if it's going to push right on through that area at all. So kind of interesting, fascinating here on natural gas. And then moving on to small caps, the sign of possibly risk on, risk off. Essentially, just like we saw earlier, kind of holding a support level here at 111 and a quarter to 111.50. So sold off aggressively, slight bounce yesterday, came back down into that area again today. Is it going to hold or not hold? If it doesn't, it's flushing pretty deep into the next level, which is 109 and a half or so. 109.35 is what we had calculated before. That's the next drop to area. Let's see if they bounce at all. very oversold as mentioned. So let's see what that is. What I did not show you was the New York Stock Exchange. And I think I showed this, it was as early as even yesterday. There's the support area, very large all the way across 9,900, and there's the bounce yesterday, bull sash formation, just simply coming back to retest the exact same level again. So we're in a correction, yes. Higher volume, yes. But that could also be buyers or might be stepping in, at least temporarily. Again, to me, this is not a true capitulation. So if there's a bounce, it's going to be short-lived before there's a possible sell-off. The sell-off could occur right here, right now as well. It could just flush and then be done just as quickly as it started the correction. So it's hard to say. But right now, this is the support area as we speak. And then there's our good friend the VIX. The VIX we knew popped into 1819, retraced. It was above the Bollinger Band 2 consecutive days. It came down yesterday, closed down below, and then today gapped up and closed once again above the upper Bollinger Band, but gapped right into 18 once again. So it's threatening to come back into 1819 and possibly through again. But these red candles are kind of giving you the inclination that there's not as much strength as we'd like to think. But look at that lower shadow from today. Closed higher, so the strength is there, but there's clearly resistance across there, and again back through the Bollinger Band. It could go higher still, but it's a little iffy. A slight divergence, I think, in price action, price versus the stochastic, slight, ever so slight. So it might come down before it goes back up again. Kind of a tough call with the support area, so anything can go, but right now we're just being cautious overall. And staying predominantly on the short side until we see something more significant on the long side.